What's going on, guys? Welcome back to the channel. So we got some things to discuss, some levels to talk about, but by the time you get done watching this video and I get done making it, I think we're going to be pretty up to speed. So the market up, down, up, down, up, down, up, down, up, down, yada, 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 yada. All right. Really, we've kind of come down, we've bounced, we've pulled back down, we've gone up, we've pulled back down, and we've gone up. So really, we've just created a inverse head and shoulders pattern, which is a bullish pattern. Okay. Now, where did that inverse head and shoulders pattern take place? Just over and just on your 180-day, 4-hour statistical mean, as defined by that line. Okay. Take a look at your daily chart, and this will all become more clear in just a second. And then you also have your long-term daily statistical level right there. And if we switch to the 1-year weekly, you will also see we have our 1-year weekly statistical level right there, which I'm going to make a width of 5, so we know exactly which one that is when we zoom in. So when we go and look at a chart with no data, right, and we'll look at like a 30-day 10-minute, you'll see what I mean. So we look at a 30-day 10-minute. Those are all of those long-term statistical trends we were talking about. So as the markets pulled back, they pulled back to the 4-hour trend, bounce. Double bottom 4-hour trend, bounce. But could not clear that resistance, so we don't break away. All right. So then we roll back down to the trend. Create a lower high, break down. You remember the big one is the weekly, so that's the long-term statistical weekly level. So now in the bigger picture, you have a down move, you have an up move, and now you have a down move. So now you have the head of the inverse head and shoulders off the weekly statistical level. You will see then it kind of goes up. You do a flag pattern just over the long-term 4-hour. All right. And you get that ghost wick candle to tag the 4-hour that day. Flag breakout, back to previous price resistance. Can't break through. Following day tries again. Can't break through. Market flushes back down, but to where? The long-term 4-hour. And I think there was another level that was, never mind. But anyways, long-term 4-hour slightly below. Then back up. So again, that's where you get your inverse head and shoulders pattern. Okay, a lot of lines in there, I know. So remember, bigger inverse head and shoulder pattern is like this. Okay, so QQQs are not going to do anything too crazy on the long side unless you actually go through all of the price action resistance here. Okay, once you go through that price action resistance, there's really nothing stopping it, basically till the all-time high, because if you look left, once you go through this, start looking left at like the cursor in that line, there's really just a big down drop. So there's not like a lot of stair step action, right? It's just big down, slight bounce up, big down, right? So it's not like it went down consolidated, down consolidated, down consolidated, down consolidated. So when we break up, there's really not a whole lot of anything to stop that move from really just attacking back to all-time high areas. Now, to be more specific on where we could attack for the Qs on the way back up, we will again use the weekly chart. We will map off our levels on the upside for the Qs. There's one. 180-day 4-hour chart. You will see pretty much is almost the exact same price as the weekly. So in this case, we probably don't even really need to map that one, but I'll just make sure we make this one bigger. Go to the daily chart, and the daily chart level comes in just before the weekly, so that would make sense to maybe put some emphasis on. So now when we look at the chart, and we'll go back to the one that's clean. So now when we look at the chart, our closest statistical levels on the upside, as of right now, are 403 to 405, meaning when and if we break this price action on the upside, this breakout I will only on the day or when it happens at that moment in time target up to 403 to 405. I will not target the all-time high. I will not target here. I won't target. I will target that line and that line because that's the closest statistical level. The same way that the market sold down and started bouncing here and bouncing here and bouncing here and here, it was selling down into long-term statistical levels. If the market breaks up through this price, we'd be breaking up and trending towards long-term statistical levels. So those would be the targets on the SPY for a long break of, let's just call it 401. And that, ladies and gentlemen, is really the entire video on the long side. Okay. It is my belief we're going to go up. I really didn't think we were going to go down again, but you know, anything can really happen. So that's the upside. I think we're going to go up, but in case some weird stuff happens, I'll also give you, you know, what you can consider for a downside. Pretty much, if you're thinking bearish, this market's going to end, I mean, you really don't even have to worry about the market going much lower unless the price actually goes below these two trends. So I'm not gonna do a big in-depth analysis because I don't really have to, because all I have to do is just basically tell you, you see where the bottom of this week is, last week, and you see where the bottom of this week is, this week. Look at the wicks. Where are they? They're on the long-term statistical weekly trending support, which is this big white line now. You will then see in just a second when we do it, like boom, right there. So again, if you're thinking QQQ's down, Omicron, it's going to just destroy everything, that's cool. You're not going to get some sort of big snap unless you actually go below 394.40 to 391.24. Now, you can see the market have a big sell off to these levels to retest maybe, but you're not going to see this sort of sideways consolidation snap down unless you obviously go through the lows, which are currently being held by the weekly and the 4 hour. So again, you're like, yeah, well, of course, if we break support, we're going to go down. Yes, but this support and this support are defined by these trends. So you're really just watching for selling action through those trends to give you a greater move down. Otherwise, you know, 405s, 406. All right. Good morning. I hope you guys get tickled in all the right ways today by the market. Have a good one.